pleasant good morning to the members of the Small Business Association, our colleagues and friends here in Barbados and in our overseas markets. It is a pleasure again to have you join us for our monthly webinar. This being the month of February, some say the month of love, we thought that we would bring a topic that some may say no one really likes to talk about, but we understand and appreciate its significance to us as business owners and entrepreneurs. And that is the focus on being tax compliant. I'm Dr. Lynette Holder, Chief Executive Officer of the Small Business Association of Barbados, and I have the privilege today of moderating our session, which we have dubbed a virtual tax clinic. For those who may be joining us for the very first time, every month the association organizes a webinar primarily to assist our members in understanding a number of current affairs issues, as well as developmental topics to assist in the management of their businesses. And today is no exception. We have two of our members, experts in their field, who will share with us as we go through this virtual tax clinic today. So before we get to the presentations, we have a short advert from one of our members, Mr. Anderson Lowe. We want to share this with you. At this time, we are focusing on being tax compliant, and Anderson is one of our financial consultants in the association. So we want to take this time now to share with you a word from Anderson Lowe.
Hey business owners, at K. Anderson Lowe Chartered Accountants, we know that tax is complicated, but taxes are unavoidable. They are even estate or death taxes, so there is no escaping taxes. Putting it off comes with a cost. Ignoring them has an even higher cost. And who wants more cost these days? That is where we come in. Whether you are a sole trader or incorporated, we can provide you with a range of services that enable you to fulfill your tax obligations in a cost-efficient and timely manner. We will set up your accounting system, maintain your financial records, prepare your financial statements in accordance with international standards, determine your tax liability, and file your tax return by the due date. And for those who have employees, we can prepare and file your monthly PAYE returns and your NAS contributions. We also compute and file your VAT returns. Whatever the tax, let us keep you ahead of them. Call Anderson today at 246-230-0900.
Thank you very much, Anderson Lowe. Very timely editorial as we address this topic today of being tax compliant. So I'm excited really about the presentation that we're about to receive from our two experts. Let me introduce them for you at this time. I'm sure many will say, well, they're no strangers to us, but we want to ensure that we know a little bit about our presenters this morning. We have with us Ms. Dawn Williams. Dawn is the Managing Director of Resilia Accounting Services. In addition to that, Dawn is a fellow of the Association of Chartered and Certified Accountants, having been admitted to membership in 2012. She also holds a Certified Internal Auditor qualification since 2015. As I said, she currently manages her own accounting firm, and she's been doing so since 2016. She's also a very active member of the SBA, and as a member, she's been teaching our QuickBooks Basics and intermediate courses for some time. And her business has been awarded the Professional Services Sectoral Award during Small Business Week in September 2016, and again in September 2018. Dawn has over 17 years experience in the accounting profession, with 7 years at Deloitte as an external auditor, 1 year as financial controller of an offshore business, and 3 years as an internal auditor at Arawak Cement. Now you'll appreciate that from this, Dawn is bringing a wealth of experience in the field. Now, in addition to Dawn being with us today, we also have Mr. Robert Homer. Now, Mr. Homer is currently the second vice chairman of the board of directors of the Small Business Association, and he's also the founder and managing director of RMH Financial Consultants. Mr. Homer has been able to take his company through the necessary processes to become a licensed corporate services provider and a registered tax agent with the Barbados Revenue Authority. His experience in accounting and finance spans 4 decades and includes working as chief financial consultant for the Mango Bay Hotel Group of companies. He's done so for the past 18 years. Mr. Homer was the recipient of the People's Choice Award for Entrepreneurship in the Small Business Week edition in 2015. And again, in 2021, he received the President's Award. So we have with us today, colleagues, 2 very competent persons who can share with us in this tax clinic on what it means really to be tax compliant. So what is going to be the process today? Within the membership of the association, we have a number of sole proprietors. Actually, our membership tends to be about 55-45% split in sole proprietors as well as registered companies. And so what we thought that we'll do today is to have our first presenter share with us from the perspective of the sole proprietor. What do you need to learn and understand as you go about filing your taxes, registering, for your TAMIS account, etc., from the perspective of the sole proprietor. And then, because our membership, as I said, comprises of about 45% that are companies, we also will have a presentation from the company's perspective. What do you also need to do in registering your company to pay taxes, to get your TAMIS number, to make sure that you file your annual returns, to again be compliant. So these are the 2 types of presentations that we'll share in our clinic today, and both presenters will go through a PowerPoint sharing with you, the do's and don'ts, and in a very practical sense, helping us to understand what are the steps to follow as we seek to be compliant. Let me encourage you at this time, please take your pens, your pencils, your notepads, your tablets, whatever is your device, jot your notes down, because we're going to take our questions and have a very robust discussion after the presentation. So we'll allow our consultants to present first, and then the floor will be open, as it were, for our dialogue, for our Q&A segment. So please jot your notes down. Each presenter will share with us for just about 20 minutes, and thereafter we'll have our discussion on what it means really to be tax compliant. So jot your notes down. Let us begin, therefore, from the perspective of the sole proprietor. What does it mean for the sole proprietor to actually register to pay the taxes, get the TAMIS number, etc.? What does it mean for the sole proprietor to be tax compliant? And who best to take us through this first presentation than our Dawn Williams, Managing Director of Resilia Accounting Services. Let us welcome Dawn now at this time as she shares with us in our first presentation. Dawn?
Hello, good morning to everyone, and thank you for the introduction and for the opportunity to speak to you this morning and deliver this presentation. So I will jump right into the presentation. As you would have heard, I am focusing on sole traders, and I will also touch on partnerships as well, meaning unincorporated partnerships. We're going to start off with the business name registration. I'm just going to go through a few things in terms of pre-taxes. So the business name registration must be submitted to the corporate affairs, and this allocates a registration number to both sole traders and partnerships, which you can use for tax filing purposes, you can use for bank account opening purposes, and also for business financing purposes in terms of opening bank accounts. For our partnerships also, we advise that you should have a partnership agreement, and that is an internal document that you basically outline the partnership terms, including profit sharing percentages. So the default assumption is that the profit sharing is equal share among all partners, but if you don't want it to be so and you want a different split, then it is best to have the partnership agreement where you determine how profits and losses are divided amongst partners. In terms of TAMIS registration, first for sole traders. So these are for persons who have registered a business name, and you register as your individual name. So if you were already registered as your individual name, you will not have to register again as a sole trader. So example here, if I, Dawn Williams, have a sole trading business called Widgets Galore, then my taxpayer account in TAMIS is registered as Dawn Williams and not Widgets Galore. But then also, if other tax types apply to me, such as VAT, PAYE, and any other tax type, depending on the makeup of my business, then I can also apply for those types as well. For partnerships, you can register the business as your business name. So if you have, I have an example here, if Andrea Taylor and Keisha Williams have an unincorporated partnership called 2 Not 1, then the taxpayer in TAMIS can be registered as 2 Not 1. So then it means then that not only will Andrea Taylor and Keisha Williams have their own separate TAMIS account for themselves, but then there will be a separate TAMIS account also for 2 Not 1. And then that business can also apply for any tax types that are applicable to them, such as the VAT and the PAYE and any other tax type. Once registration is complete and approved by the BRA, then a TIN number, will be issued to each taxpayer. And the TAMIS profiles can be edited at any time. In other words, if any information changes about your personal information or a tax type, for example, if your banking information changes or your address changes, or you have met the VAT threshold after in business for a couple of years, then you can also register and change your details, update your details in TAMIS. Now, in terms of NIS registration, you should be registered with the NIS. It will be submitted to the director of NIS. And there are 2 main types of registrations that apply to sole traders and partnerships, which are the self-employed NIS registration and the employer NIS registration. The self-employed NIS registration, you should not register for this though if you are also employed. So if your sole trader business is in addition to employment, then you should not register as self-employed because NIS is already paid and deducted from your salary as an employee. All partners or sole traders that are not otherwise employed should register. And then you get an individual NIS number if you did not have one already, but you should, even if you were an employee before, and you no longer are an employee, but now you're self-employed, you should communicate this and register as a self-employed person with the NIS. And this point that a lot of people don't realize is that registrants can declare an income level which they can maintain payments for. And this means that you don't necessarily have to pay on the actual income that you make, because the NIS understands that self-employment and running a business can be cyclical. You can have some months where your income is up and some months where your income is down. But once you can maintain a particular level of payments, which are due quarterly, then they are fine with that once you declare to them at the time of registration as a self-employed person what that income level is. For employer registration, you should only register as an employer with the NIS if you have employees. You will get a separate NIS number, which usually begins with a 9. So that's how you kind of tell the difference. So the NIS number that you get as an employer will begin with a 9. It usually is about, I think it's 8 digits, I think, or 7 or something like that. But it usually begins with a 9. Self-employed persons should not be counted in the number of employees when registering as an employer. So the form will ask how many employees does the business have, so that the NIS will kind of gauge how much revenue will be coming into them as NIS tax. But you should not count yourself as an employee if you're already registered as a self-employed person with the NIS. The NIS returns and payments are due monthly, usually by the 15th of the following month, as we are all aware, and are separate from self-employed returns. And as I said, those returns are due quarterly. So they usually are due in the month after the calendar quarters. So for example, the quarter 1, which is January to March, is due by April 15th and so on. And it also, as an employer, you are required to deregister if the taxpayer is no longer an employer. So if you have ceased to be an employer, then you are expected to deregister with the NIS. For the PAYE return filing, and this is for your pay as you earn. That's what PAYE stands for. It's also kind of seen as a prepayment of personal income tax, or prepayments of personal income tax. It applies to registered TAMIS taxpayers with employees. So if you are registered in TAMIS and you said in your registration that you do have employees, then you are expected to submit monthly PAYE returns. And returns should be submitted for all months, even if you have what we call zero return months, which is if you paid no NIS, or sorry, if you paid no employees, that still should be submitted. So basically then you would just submit a return that has the list of your employees, but with 0 amounts in it. For those, if during that month you did not pay your employees. This return also requires the TIN numbers of all your employees. So this is where a little due diligence on your part comes in. It is your duty as an employer to have the TIN numbers and other personal information for all of your employees. And the reasons for this is because when you submit the PAYE return on behalf of your employees, that information is fed into their TAMIS accounts. And so therefore, at the end of the year or in April, usually when the tax is due, then they log in and they can see all their third-party information, which we'll get to in a bit, but they can see all their information compiling of all of the returns that you would have filed for them during the year. So just to reiterate, if this return is not filed, then you are actually hindering your employees from filing their returns and from being compliant. So let's go through the PAYE return. So you have, this is a screen showing the upload, the Excel upload for PAYE. And all of these fields are also in TAMIS. If you only have 1 or 2 employees, you could choose to fill in the information via a form on TAMIS, or you can choose to upload this Excel document. And so it has your TIN as the submitter, your name, your address, the year, and the month at the top. It also has the space at the bottom then where you would input your employees' TINs, and you should always make sure that they are 13 digits. And actually, if you try to upload a TIN that is not 13 digits, TAMIS will give you a warning to say that this particular TIN was not accepted or is not valid. You have your employee's name, which should be their legal name. And then in terms of column 10, where I have it circled, that is where for this purpose, you basically put the start of the year if the person was employed before this year. But if they started working during the year, then you would put the start date that they are employed. So for example, if a person here was employed from 2018, you would still put the employment start date for every year as January the 1st of that particular year. Obviously, the date employment ended is optional depending on your circumstances or the employee's circumstances. The tax code is more than likely usually 250M or 250W. What that means is that you fall into the 25,000 personal allowance bracket and you're paid M monthly or W weekly. That will vary if the person has dependents. So you should always double check to see what, you can double check with the BRA to see what their tax codes are. In column 13, you put the total remuneration before deductions. So you will put basically the gross pay of that person. In column 14, you put the income tax that was deducted, if any, because you know, not everyone pays income tax. They're not at the threshold, perhaps. And then in column 15, you put the NIS deductions, which were deducted from the person's salary. So basically, you're mimicking kind of like their pay slips in this document. We have some more columns here, which I won't go into much detail, but if the columns do apply to you, because there are certain people that will have benefits in addition and allowances in addition to their gross salary, then those will go in the respective columns. And the last column that I will go through here is column 32, which is the tax paid by, sorry, this is not the last column, 32, the tax paid by employer on salary. As a sole trader, you will want to put this in because sole traders get tax rebates for the employer portion of the income tax that, sorry, the NIS that is paid for an employee. So as you know, there is an employee portion that is deducted from their salary and an employer portion which you pay as well. Currently, that is 12.75%. If you can actually claim for that as a tax deduction on your annual income tax form. So if you put it here, it will automatically feed into the form. And then column 35, which is the basic monthly salary. That basically is your base gross pay. So without allowances, and it's usually equal to the first column that you would have put in this form. So that was PAYE. And now we go to personal income tax. So you want to be filing, we are going to go through filing a personal income tax return. They should be filed by all taxpayers for all years, whether or not income was earned. And this is something that a lot of people don't realize, but you can be penalized for not filing taxes, even if you should have filed 0 because you were not working in a particular year or you did not earn in a particular year. And the PIT applies to sole traders, partners after filing a divided return, and employed persons. So with partners, the partnerships, they will file a divided income return, which will give the profit sharing of each partner. And then that particular number per partner is fed into their personal income tax return. So they basically have to file 2 returns. So the first step when you are filing is to check for your third-party information. So you want to check in TAMIS, and I have outlined where you see it there, account third-party information. That is where all of your salary information will be if you are employed. That is also where you will find any, if you earn any income for which withholding tax is deducted. So if you are earning dividends or investment income or something like that, where you're earning, where withholding tax is due to be taken out, all of that should be there, as well as if you have paid deductions. So like, for example, if you have submitted donations to a charity, that should also be under your third-party information. Never start filing unless you have verified the validity of this information. And it doesn't apply to everyone because everyone does not have third-party information. But if you do, definitely check it before you start, because once you start, this is the information that will fill into the return. So if there are issues there, you want to resolve them externally outside of TAMIS, you want to go to that third party and say that you have a query as it relates to that information. And then once you do that, you can actually submit a filing extension if you believe that there will be delays in the third party return. And that filing extension is under the returns button there next to account. And you can see submit a filing extension. There it is. So here is where, again, you will add your return. And I won't put up every single screen that you will see in a PIT return, just the ones that maybe need a bit more clarification. So I advise you to, as you are doing the PIT return, even though the form is a bit long, still read every line to see if it is applicable to you. If you have any questions, I would advise you to consult with an expert. So this screen, the first slide, it shows for the option of the personal income tax return. So you can select that and then you click create return. And the second screen is the next page inside of, or a page, sorry, inside of the return, just to show you the difference between a grayed out field and a white field. So the grayed out fields are not editable by you. So those are either because you have third parties where that information will automatically fill in, or it may mean that you have made an error when you were setting up your tax account, and therefore there might be something applicable to you that you did not address. Sorry, I was timing myself. All right, so we'll go on here. So this next one here is, it shows you in the red arrow where you can enter any other income, and that's a white field. So if there's any income that you earn that is not otherwise in the form, you can fill it out there. The green arrow here shows any other income from any source outside of the island. So that's like, for example, if you have director fee income coming from an overseas company. Part D in the form is where most of the business information will be filled out. So this is the screen that asks you for all the income and all the expenses of the business. So for self-employed persons, this is where the majority of your figures will be filled in. And then you can see the red arrow there, net profit or loss from partnership. That is where if the divided income return is filled out by the partnership, then your share, your profit share will be included there. So you have a return. So to add a return, there are other parts of the form. And again, I won't go through everything, but some aspects may be applicable to you, some may not. You just need to read the form and make sure that you are filling out the applicable sections. I will say here, the loss reporting section is for all business types except the ones with specific parts. And this is applicable to businesses who have had losses in the past, because losses can be offset against current or future profits up to a certain extent. And so again, I would advise you to seek an expert opinion on that. You have the personal allowances and deductions. This is where you enter the NIS contributions paid for employees. So if you had put it in that column in the PAYE return, that's where this would come in. You type in your medical expenses if it's applicable for persons over 40, investment in cultural practitioners if applicable. You also have a section for income for residential rent. So this is if your business particularly offers residential rent, then you will not fill out section D, you will come to section J and you will fill that out. The income tax calculation, this is like a summary page. And basically it uses all the other information from that you would have filled out, and it calculates the income tax that is applicable to you. You also can see prepayments if you would have made prepayments during the year, because those obviously will reduce your tax liability. And after the prepayments is offset against the total liability, then you see the net tax that is payable, which is either due in 1 or 2 installments, and your the TAMIS account, the return, sorry, will show that. It will show if it's 1 or 2 installments and when they are due. It will also show if you're due for any refunds. I'm going to skip the first part and say for the supporting document section, it's not mandatory for the PAT return, but you can include supporting documentation such as an income statement or other documents that will prove other aspects of your PAT form. And then the last part is usually the return summary. And once again, always review, because you can make edits at this stage. You can go back, click the previous button until you see where you've made the error, and you can make the changes there. I will say also too that usually if you save a return, so if you want to save it and come back to it, usually if your third-party information changes, the save return feature does not exactly update for any changes in third-party information. So if your third-party information changed, it means that you have to redo the form from scratch and basically discard of the draft that you saved. The divided return for partnerships is where the partnership will enter its assets, liabilities, equity, income, and expenses. So basically your balance sheet and your income statement goes there. And it also confirms the partnership sharing of the profits and losses. And as I said, for partnerships, you file both the DIT, which is the divided income return, and the PIT per partner. I will skip this. Tax prepayments and payments. So you have the PIT payments are due by April 30th if it's in one installment, or by April 30th and September 30th if it's in 2. The prepayments for employees, those are done monthly because they're deducted from the salary. For self-employed persons, you can TAMIS will ask for this quarterly, and it's usually based on the previous year's liability. So they will take last year's liability, divide it into 4, and basically that will be your 4 prepayments or 3 prepayments and the final one. That's how they calculate that. So if you had 0 in the previous year, then you wouldn't have any prepayments to pay this year. All payments can be made via EasyPay in TAMIS, and you can change it to match the current payment. So you can edit the fields in TAMIS to say exactly what it is that you're paying. In terms of record keeping, I have a slide here with all of the records that you can keep and for how long. So I won't go through this because you can see this afterwards. And the last slide is on statutory audits. And this is given a reason really for all of the filing, not only a reason, but also giving you a heads up on what the BRA can do. They can select any taxpayer, so either an individual or a company or partnership or whatever, they can select any taxpayer for a statutory audit, and they can go back like 5 to 7 years. And so therefore, that's why we advise you to keep your records at least for the past 7 years, so that if you are selected for an audit, you have the documentation that you can provide to them. And failure to provide sufficient evidence can result in penalties or fines or imprisonment. So that is the end of my presentation.
Right, Dawn. Thank you very much. It is quite a bit to share, and I'm sure I can hear the thoughts of our many members and colleagues on the call, that there's so much information, and I'm sure they have a lot of questions. But let me assure them that we're going to have our Q&A shortly, but more importantly, the PowerPoint slides will be available on our website and available on Facebook and so on, that you can review. And thirdly, in the event that you need to sit down with one of our professionals, to get some assistance for your filing come the next tax cycle, as we get ready for the March-April period, rest assured that we have several that will be available to you. So I want to allay the fears and concerns of our audience today, that the information will be provided to you. So that was a snapshot from Dawn Williams on the process for the self-employed person. She kept using the acronym PAT. PAT is personal income tax. So for the self-employed person, you got an introduction there of what is the process that you ought to follow. This is not for the company, but this is the self-employed, the individual, or the general partnership. You tend to have more liability as an individual than the company. But as I said at the beginning, over 55% or thereabout of our membership are actually sole proprietors. So we want to really focus on that segment. So we're going to get to the Q&A shortly. But for example, Dawn, we'll need you to share with the audience a bit more on the third-party information, because that's critical in ensuring the accuracy of your filing data on TAMIS, the third-party information. And you shared earlier the Excel form from TAMIS. Let me let persons know that if you do not have access to that Excel spreadsheet, you can let us know. We'll send a copy to you that can facilitate your filing. So we're gonna get ready now to hear from Robert Homer as he looks at the company, but we're gonna share a short ad with you from RMH Financial Consultants, and then we'll get to the presentation. And after that, we'll hear also again from our member, Anderson Lowe. All of these colleagues are financial consultants who will assist you as you get ready for filing come April 2022. So let's get our next ad from RMH Financial Consultants.
Okay, folks, tax season is here again, 2022. Don't wait on the deadline. Get prepared. Make sure you've done all your closing entries to prepare for filing your corporation tax, and upcoming personal income tax. Be ready for the season. If you need any help, we're here to help you. Real help is available at RMH Financial Consultancy. Thank you.
Thank you, RMH Financial. Let's go to the presentation now from Robert Homer as he focuses the attention on what is the process for the company. We dealt with the sole proprietor before. Let's hear now about the company, that limited liability company, a person in law, as it is often known. Let's hear Robert at this time. Over to you.
Thank you, Madam CEO. Welcome to all participants on the call. I'm going to share my screen at this time so we can jump straight into the presentation. It's all about tax season 2022. And I'm going to jump straight into it. Once you have gone through all of those procedures that Dawn would have outlined earlier to become tax registered, you would get your TAMIS number and you will be assigned a password. So when it comes to filing taxes for the companies, you log on to TAMIS. Once you have your number, your username and password, you would come to a screen like this. You would just tick the box that says, I'm not a robot. And then you'll be able to proceed to the next step. So when you do that, you get a welcome page. The welcome page shows a summary of any taxes owed to the Barbados Revenue Authority, along with reminders of any returns to be filed. You may notice that there's a reminder for PAYE reconciliation for employers to be filed by February 28th, but this is not valid. It comes up every year, but we file our PAYE returns on a monthly basis, so there's no need for this annual return, so you can ignore it. So moving on from the welcome page, you get to add, you choose to add what type of return you can add, and the tax types that you can see here is administrative fee, corporation tax, corporation income tax, goods and services, including royalties, pay as you earn, and value added tax. Those are the different tax types that as a company that are available. So once you've selected your tax type, if you have selected corporation tax, then you would see the new return detail box appear, and it will show you any outstanding returns to be filed here. As you can see, your corporation income tax for 2021 is due to be filed by the 15th of June, 2022. Moving on to the next screen. If you select your PAYE return, which is pay as you earn return, it shows any outstanding obligations and any upcoming obligations. In this example, you can see the January return that was due to be filed by the 15th of February was overdue, and the February return is due to be filed by the 15th of March. Okay, moving on to the next screen. We have talked a lot, and Dawn went through quite comprehensively the PAYE returns, but there are guidelines on BRA's website where you can have, you can see the guidelines and how to fill out this form. But there is a PAYE upload template 2019 to 2022, which can also be downloaded from that site, which is the form that you have to use to fill in to make the PAYE returns. So our CEO just mentioned that if you're having difficulty with that form, the SBA would assist in sending it, or you can go to BRA's website and find it there as well. And Dawn would have gone through the PAYE form. This is what it looks like. She did some extensive stuff on it. It is the same for a company as it is for an individual. So I would need to spend very much time on this slide. I think Dawn has covered this quite comprehensively. So we now on to the value added tax or the VAT return. Now, when you select that type, again, it would show you any outstanding obligations or when your next VAT return is due. The next period due is February and March, which is to be filed by the 21st of April, 2022. Moving on to the next slide. Pay as you earn reconciliation. If you select that, you will see you currently have no returns due or overdue. So that is not a requirement, as said earlier. Goods and services, including royalties, Dawn would have touched on that. But you would see once you go to file that, it is due to be filed by February 28th, which is in the next 4 days. So if you have not already done so, you just have 4 days in which to meet this deadline. So we now look at, if you want to access your statements to see if you have any outstanding liabilities, this is where you go to your account tab. You can select the tax type that you wish to get a statement for and the year. Okay, so this is where you would go to get your account statements to see if you have any outstanding liabilities due to the Barbados Revenue Authority. The next tab speaks to our tracker. Now, if you have been registering companies or individuals, it tracks all of that information and it shows you the progress that you can see where you are in tracking the various registrations and other information that you might have requested from the Barbados Revenue Authority on behalf of your clients. Next is the Update Detail tab. And this is where you would go to update any details on the company, whether it be update your address, phone number, or email or bank details. You may want to update one or more tax type. For example, you may be VAT registered, but you realize that over the past 5 years, your revenue has fallen below the 200,000 threshold. And you can choose to deregister for VAT because you're under the threshold and you've been under the threshold. It doesn't look as though you will meet the threshold. And you may decide you want to deregister. This is where you would do that. You can also request a cancellation of one or more tax type. For example, you may not have any employees because you may be self-employed as a company without employees, so there's not a requirement for PAYE. So if it is coming up, you can ask for a cancellation of that. And you can also request a temporary suspension of your taxpayer account for one or more tax types. The next tab is the admin, where you can change your password. Of course, you have to remember what your password is. So you can put a new password. It follows certain directives. It said it must be at least 8 characters with at least 2 or more letters, 1 or more numbers, and 1 or more special characters. So these are the main areas in filing company taxes where you would have seen where to go to file your corporation tax, where to file your PAYE, where to file your VAT, your goods and services, and the other tax types that you can file. So thank you for your time and attention. We will wait now for any questions to be posed in the forum.
Thank you very much, Robert Homer. Let us get our advert now from Anderson Law and why that has been played. Please get your questions. I am already seeing a few in the chat, so be ready to go with our Q&A segment. Please get your questions together for our discussion to follow. Let's hear from Anderson Law at this time.
Hey business owners, at K. Anderson Law Chartered Accountants, we know that tax is complicated, but taxes are unavoidable. They are even estate or death taxes, for there is no escaping taxes. Putting it off comes with a cost. Ignoring them has an even higher cost. And who wants more cost these days? That is where we come in. Whether you are a sole trader or incorporated, we can provide you with a range of services that enable you to fulfill your tax obligations in a cost-efficient and timely manner. We will set up your accounting system, maintain your financial records, prepare your financial statements in accordance with international standards, determine your tax liability, and file your tax return by the due date. And for those who have employees, we can prepare and file your monthly PAYE returns and your NAS contributions. We also compute and file your VAT returns. Whatever the tax, let us keep you ahead of them. Call Anderson today at 246-230-0900.
Okay, thank you so kindly, Anderson Law, a tax expert who can share as we get ready for this upcoming tax season. So we've heard from our consultants, our professionals today, Ms. Dawn Williams and Mr. Robert Homer. We have a few questions. Let's get to them. First of all, Dawn, I believe this question is for you. Coming from Barbara Carter. Can self-employed national insurance payments be deducted for income tax calculations? Can self-employed NAS payments be deducted for income tax calculations? I'm going to ask my technical staff to have Dawn and Homer's webcams on so we can have a discussion at this time. Over to you, Dawn.
Hi, yes, please. So I would say no, because that forms part of the person's salary, of the owner's salary, and therefore you should not really include payments of salary in the personal income tax form, because basically you can't write off a payment to yourself if you are the taxpayer that is submitting the return. So that would be my response.
Yeah, I looked at the question. I thought too that may not have been practical, Barbara. So Barbara, you may want to come back, and if you have a follow-up, and let us know. But Dawn, while I have you on the line, I need you to go a little further into the third-party information, because this is critical. This is critical when you are setting up in TAMIS. Yes, you know, you rely on those vendors and the information from the vendors to be able to submit an accurate filing. So tell us a bit more about the third-party information.
Okay, so the third-party information is information which reflects your financial transactions with third parties throughout the filing year. So for example, for employers who would have been paying their employees, that the PAYE return essentially is third-party information. So that will feed into the person's personal income tax form. You also have trade union subscriptions. You have churches and charities, any donations that you would have made to those. You also have the persons who are companies, sorry, who pay for services. So you have the goods and services form. So in other words, if you would have done business with another taxpayer, that taxpayer then can capture your information to say that they would have received money from you, or they would have paid money to you during the previous year. And all of this is because the BRA is striving to capture as many taxpayer information as possible. So that's why the third-party information comes in case you have not yourself included that information. You have entities that provide pensions. You have entities that deduct withholding tax. I think I would have mentioned that already. You have the partnerships, as I would have mentioned already, and the NIS, the National Insurance Office. And what I must say about the National Insurance Office, a lot of people don't realize when the National Insurance pays you benefits, those are taxable. So if you receive sickness benefits, or even pregnancy, like maternity benefits, and those kind of things during the year, no taxes are deducted when you actually receive that money, but it counts as income for you in that year, and therefore taxes will be deducted at the tax time in terms of April.
Okay. And while I'm on that, I'm going to get to Homer. I'm seeing a question here for you, but let me follow up. Veronica Laurie is asking Dawn that if she filed the PAYE returns every month, would she still need to file third-party info for employees for the year?
No, in short, no, because basically Thomas will read all those 12 months of returns and basically summarize it in the third-party information. So it's just really when the taxpayer checks their information, if there's something there that they are not happy with in terms of that it doesn't match their pay slips, for example, then they can go back to the employer and say, well, hey, this information seems to be incorrect. Can you please check this out for me? And if there is an error, then the third party, the employer, will have to resubmit that information for them so that they can file their taxes based on the correct information.
Right. Okay. I trust that Veronica is pleased with that response. Let me go to Robert Homer now. I have a query here from Charlene. Charlene Holden, my namesake, maybe related to me. She's asking if I have a company and I engage contractors to do a task, a day-to-day task, for example, accounting. Do I have to file the fees I pay them in TAMIS? Do you have it, or you need me to repeat it?
No, that's fine. Right. So if you pay a professional to assist you in preparing your financial information, then you can claim that as an expense in your financial to work out your net profit. So the short answer is yes, you can claim professional fees as an expense for tax purposes.
Right. Okay. All right. So Charlene is coming back. Can you give a summary of how the goods and services form is applicable? Who files this and why, basically? Give a summary of how the goods and services form is applicable. Obviously, you know, you're filing for a company. So who files this and why?
Right. So the goods and services is really any good or services that the company would have received from an individual. What companies should be doing is when an individual come to give a good or service, the company should be asking them for their TAMIS number so that they can file what monies they would have paid those professionals or artisans over the year. And that's where you file your goods and services for those persons who you do business with directly that are not companies. So a company, you wouldn't do that, but an individual who provides a goods or service, you should be tracking that and through the person's TAMIS number and filing it, where they would then see the money that you pay them in the year coming into their tax return. And it's up to them now to put in whatever expenses they incurred over the year to work out their own tax return.
Right. Okay. All right. Veronica is very pleased with the responses so far. Let me go back to Barbara's query. Robert, you can take a stab at this one. Is there a limit on the amount of deductible donations made, obviously for both the sole trader and the company? Can donations only be deducted if made to registered charities?
Yes.
I believe so, yes.
Yes.
Because
yes.
yes, those people again would file the same third-party information for the donations they would have received so that those persons can get the benefit from it. But it's up to the individual church or organization to submit that information as well.
Right. So Nicole is asking, who needs to be VAT registered?
Well, once your income is over the threshold of 200,000, then it's a mandatory requirement. But even if you are under the threshold and you expect that you will get there, you can still be VAT registered even though you are under that threshold.
Right.
Yes, and,
okay.
and that relates, just to follow up, that also relates to companies as well as individuals, sole traders, partnerships, any business type. Once you are over the threshold or trending towards the threshold, then you should be VAT registered.
Right. All right, Dawn, let's go back to you. Sean is asking a rather interesting question here. He's saying, let's get the scenario first of all from Sean Eiffel. He says that he uses a free online program called Wave Apps to create his tax filing as a sole proprietor. Okay, he uses this Wave Apps feature that is available. Okay, it is safe. He's asking, you know, is it safe to use such platforms to create your documents for submissions? Example, your P&L statements and so on. Is it safe in your view to use them? And then secondly, is it safe in recording receipts? Okay, because he takes photographs of the receipts and uploads them to the platform. So you want to know, you know, if it is safe. And then should he hold on to the physical receipts to meet the 7-year obligation, even though most of them, obviously, you know, they fade away. So you got to find a way to maybe prevent that from happening. But should he hold on to those receipts to try to meet that 7-year obligation? What are your thoughts on this scenario from Sean?
Sure. Okay, so the first part would have asked about the usefulness of those apps to file your taxes. To an extent, yes, but I'll say only to an extent. And the reason is that if you are a sole trader, for example, and you are maintaining records in an app, there are some expenses which may be personal based, which you will have in your regular accounting, but they are not allowable for tax purposes. And therefore, so there is a difference between tax records or tax accounts and regular management or financial accounts. And so therefore you will still have to maybe do some manipulation outside of those apps to get the correct information. So to exclude things like your salary and that kind of stuff. In terms of the safety of those apps, what I will say is, or what I would advise really is for you as the users of the apps to read up on your policies, because every of those apps and websites and stuff, they have policies as it relates to safety and the retention of data and that kind of thing. And I would advise that you would check with those with the app provider basically to see what their processes are and to satisfy yourself that it is safe. What I will also say too is that the service usually ends if you don't pay. And so therefore, if there is a month, if you're paying month to month and you miss a month or you're late a month or whatever, then you may not have access to your records. But if you pay the next month, then you know, then you will have access to the data that would have been there before. As he would have asked, in terms of saving the documents outside of the app, yes, that is a good practice. But once you do have the app and if it gives the option to export the file, like to export a year's file with the attachments and everything like that, then you will have an easy way to kind of back up your data outside of the app. But yes, you definitely should keep those records outside, and the scans will be fine. Once you have the scans or the photos of the receipts and what's not, that will be fine even if the physical document fades.
Right. And I'm not sure if Robert, you wanted to weigh in on the use of these apps. Wave apps was one mentioned here.
Yes, well, I am familiar with that particular app, Waves, and it does capture the accounting information required. But I would advise any business owner, regardless if it's Waves, even if it is QuickBooks, that at the end of the year, when it comes to your tax filing, you still need the help of an accountant or a professional to help you navigate getting your numbers sorted before tax filing. So even though you may have put together most of the information yourself, at the end of the year, you still need that assistance from a tax professional. It is a bargaining chip that you have, that you're going to these tax people, you've done most of the work, but they still need to finalize it for you. So you still have the power of negotiating that fee that they didn't have to do all the work. You've done most of it yourself. using whichever platform, but at the end of the year, you still need that help.
Right. Okay. No, I quite agree with that. It's like, you're trying to go online and learn a little bit about law and so on, but then when it comes to that contract that you're going to give to someone, you better get someone who has an LEC who's passed the bar, so at least to review it for you. So I quite agree that, yes, you can go at it on your own, but at the end of the day, when it comes to filing, it's maybe good to get a professional to relook those numbers and make sure that, you're all is well with you. Okay. All right. I have lots of questions, just so bear with me. I have one here from Crystal's store. I believe this might be for you, Dawn. For a person being paid bi-weekly, will the tax code be 250 BW, 250 by W? What's the tax code for the bi-weekly paid person?
I believe that will still be 250W, because that would be the code that most aptly suits how they are paid. So there's no biweekly code, but you can still put that person as 250W.
Okay. All right. Robert, can personal pension or medical insurance expenses be deducted as a business expense if the policy is in your name and not the company's? This is Kristen asking this particular question.
So what is it about the pension you said?
Right, so let me repeat it. Can your personal pension or medical insurance expenses be deducted as a business expense if the policy is in your name and not the company's name?
Well, if the policy is in your name and not the company name, then it's really personal. But if you are an officer of the company and the company gives a directive that you can take out the policy in your name once you have satisfied the paperwork that says the company would pay this on behalf of the officer, even though it's in their name, then I think it would be properly constituted that you can take it as an expense. But other than that, you cannot have it in the company if it's in your personal name.
Okay.
Yes. So
Yes,
in other
Dawn, you
words,
want to weigh in as well?
So in other words, keep your director's resolutions
Right.
that on the decisions that you make to back up your decisions, basically.
Yes.
Right. And which is another topic I'm sure that we need to look at some point in time, because many of our members, small business persons, are the shareholder, if you will, and director of the company. So they tend not to make the differentiation. They might just say, oh, I'm the owner, or I own this, without using the language of shareholder or using the language of director and that kind of thing. And sometimes, it can get a little muddy along the way, and appreciating the legal ramifications. So I take your point there. All right, let's get to Andrea Marshall Harris. This is a rather interesting one. Homer, let's take a stab at this. If you have a new company, which was one, registered with KIPO in the latter part of 2020, and then two, you registered with BRA in 2021 for TAMIS. Three, the business commenced in August, for example, of 2021. When is the first filing due? Not so sure if you got all that. This is a good
Yes.
scenario here.
Well,
First of
once
all,
you've
they
registered
with KIPO in 2020, then with BRA in 2021, and to get their TAMIS number. But the business actually started in August of 2021. So when is the first filing due? That's one. And the business activity declared to TAMIS was actually August 2021.
Right. So my response would be, once you have registered in TAMIS, the system expects your obligations to start immediately. So even if you have registered and then it takes you a few more months to get going, for those months you have to still file 0 returns until activity actually begins. So the short answer is, you have to file once you're registered. They will give you the dates from which your returns will begin. And it is from when you register. So even if you don't operate, so it's more wise to register closer to the time that you know you will actually start operating. Because some people go and they incorporate the business, but they do so ahead of when they know they're going to operate. They may sometimes start operations 12 months after the incorporation, right? But some people go ahead right after they receive the incorporation documents and they go and register with the statutory bodies, which they are supposed to do, right? But then if you don't operate, then you have to file your zero returns until you start to operate.
Right. So you still must still file. I think I heard Don made that point earlier. You must file, even if there's no business activity, you must file.
Correct. Correct.
I have
Don, you wanted
I have something to add there as well too. So whenever you are registering on TAMIS or you're registering a tax type, it asks you the start date that you would like the taxes to start from. So I would advise then that if you are not, if the business was not trading before August 2021, then they should put the start date as August 2021, but that will still be due in 2022. I will also add though that they also would have mentioned that they would have been registered with corporate affairs in 2020. And that means then that there also is that annual domestic return form that is due every year to corporate affairs. So this has nothing to do with TAMIS, but that if you registered in 2020, even if it was on December the 31st, you have to file a 2020 return in 2021. And that date, there are two deadlines. So it falls either on June the 30th or December the 31st, depending on your corporation date. And you definitely don't want to be late where that one is concerned, because the penalties are fairly high, $10 a day, and it goes up to $3,000 a maximum per year.
Yes, I'm of the view now, consultants, that they just too many requirements now to register. It's confusing, huh? They maybe need to have one agency that you do everything. You just register with that one agency and that's it. Okay, let's hear Marcia Armstrong. A very good question again coming from our audience. Given that we don't have to register our company name in TAMIS as a sole trader, if you make less than the yearly threshold of $25,000, how should you approach filing? Who wants to take that one? Let me repeat it again. Given that you don't have to register your company name in TAMIS as a sole trader, if you make less than the yearly threshold of $25,000, how should you approach your filing?
Right. So that person will still have to file a return. So they will state that their income was less than 25,000 and their associated expenses. What it will do then is that the firm will then apply the personal allowance to any income available, but because it is below 25,000, it would basically then be zero tax owed. But you should still file that return as your in your personal name.
Right. Okay.
Just to add to that,
yes, go ahead.
I would just like to make the point for self-employed persons who are working for under the threshold of 25,000. Those persons do not qualify for the reverse tax credit.
Correct.
You must be employed. You must be employed for at least 4 consecutive months in the year, and you must have earned at least $4,000 for the year to qualify for that reverse tax credit.
Right. Okay. All right. I have another 7 minutes to go, so let me see how many more we can get in that remaining time that we have with you. Ian Maynard, Robert is asking, how can you view or see prior employer information for an employee who did not file in prior years from e-tax prior to 2018? How can you view or see prior employer, I said employer, I think I said employee, so let me repeat that. How can you view or see prior employer information for an employee who did not file in prior years from e-tax? I'm not so sure if e-tax is about electronic
That's the oval, the system before Tamis.
Right. Okay. Prior to 2018. Yes. Yes. So how can you view or see the prior employer information? Can any of the consultants tell us?
For that though, you may have to speak to a Barbados Revenue Authority representative, and you probably can request, because like I have requested statements before, but in terms of seeing past returns of your employees is what they were asking.
Yeah, for the employees.
For the employee. So if it is information that was filed by you on behalf of the employees, then that information should be available to you, but you have to speak to a Barbados Revenue Authority representative because the e-tax system is no longer available on the internet. Only they have access to it.
Yeah, I suspected that one may very well require engaging the BRA directly on that one. All right, so Nicholas is asking if I obtain national insurance sickness benefits and pay these over to his company, since they were still paying the salary during the sick leave, will he be taxed on this additional income?
Can you repeat that again?
Who wants to take this one from Nicholas? So Nicholas apparently obtained national insurance sickness benefits and paid these over to his company, obviously because the company was still paying his salary during the time he was on sick leave. So will he be taxed on this additional income that he received from national insurance?
Okay, so I will tell you what is supposed to happen. When a person is ill and they submit a sickness benefit, if it is the company's or the employer's policy that you remit the benefit payments to them, what they are supposed to do then is that they are supposed to declare that they have paid you your gross salary less what the NIS paid. So in other words, if the NIS refunded you 2/3 of your regular salary, then the employer is only supposed to say that they paid you 1/3. And that's why we advise you to check your third-party information, because that has been a problem in the past where employers will state your full salary on top of what the NIS says that you would have paid. And that is not the correct way to go. It should be that the two together should total your gross salary. So you should only be taxed once.
Once, correct. Yes, I would think so. So this is why it's important. Going back to what Robert said, to get someone to look over your stuff, before you actually complete the filing. You see, to verify that kind of information. Here's Ricardo. Dawn says, I have you there. A follow-up question from what you said in your presentation. For a self-employed person who already has a full-time job, in addition to their activity and their self-employment activity, do they still follow your steps? I think you addressed this before, that if you already are full-time, employed somewhere, that information that goes in the national insurance is what suffices for you, isn't it?
Yes, in terms of the national insurance, but I think they were more asking, so what is supposed to happen is that you're supposed then to declare both the employment income as well as your self-employed income. So the employment income will fill into the form automatically from your employer, but you then would be tasked with inputting your self-employed information, which means that your tax could be higher based on the additional income that you would have earned from your business. What I will say though is that if you make a loss in the business, the loss does not reduce the tax on the employment income. So in other words, if you had taxable income from employment, but you made a loss in the business, you still have to pay the tax on the employment income.
Right. So there's no offsetting.
No.
There's no offsetting.
No.
So that really sounds a bit unfair to me.
The loss then though will be you can carry forward the loss in case you earn a profit in later years within a 7-year period. You can use that to reduce the future profits, but it can't offset another tax type.
Yes.
If I may add to that.
Yes, Homer.
there was a time where if an individual was employed and had a business outside and it did experience a loss, you did get the benefit of reducing the taxation on your personal income from your job. That used to happen, but that was taken away and it's no longer theirs. But we used to get it passed.
But not no. So no, we have to resort. We have to resort to using that 7-year window that Don mentioned. That you can, especially if the company has not made a profit, continues to make losses, that you can carry it forward.
Yeah. And they expire outside of that 7-year window.
Outside of the 7-year period, right? Okay.
And they only offset 50% of future profits.
50%.
So it's not even 100%. You can only use the losses to offset 50% of the future profit. So you will still have to pay tax on 50% at least of the profit.
But at least you have 7 years.
Yes.
Yeah. Okay. So here's Sherry Riley introducing a new concept. Robert, let's take a stab at this. If you collect rent from a residential property, is there a limit on the annual expenses you can claim for tax?
Once those expenses are relative to the property, like the land tax, insurance on the property, any upkeep or repairs and maintenance, there's no limit to the once it is legitimate expenses on the property. You may paint the building every year, you may be doing grounds upkeep, the property may have a swimming pool that has to be maintained on a weekly basis. So all of these are legitimate expenses that you can claim.
Okay.
On a property, yes.
So Samantha is following up on our earlier discussion about the start date and so on. So she's asking, what about businesses that is Kaipo and Tamis, the tin registration at the beginning of 2022? When is the first filing date of year rather? When is that first filing to be done? They started that is Kaipo and the Tamis tin at the beginning of this year, 2022.
Right. Go ahead, Don. Go ahead.
So that should be June next year. If the first filing date was in January 2022, the first tax return should be due in 2023.
In 2023, right? So it's filing returns with Kaipo for businesses only, or NGOs included?
In terms of the annual domestic return, it should be registered companies, but I believe NGOs are exempt. I could be wrong. I speak subject to correction, but it is for all registered companies with Kaipo. So not business names, not partnerships, but companies.
Robert, you wanted to weigh in on that?
I think Dawn answered that quite well.
Okay, but here's an interesting twist from Michael. Now, what happens re your tax filings with companies registered in 2019 but commenced trading in 2016? That's an interesting perspective.
If the company, you said the company was registered in 2019, in 2016?
The company registered in 2019. But they commenced trading in 2016. In other words, they were doing business in 2016. But they registered a few years later.
And you're talking about Tamis registration, right?
Right, that's it.
Right.
Yeah, well, it says tax filings here.
Yeah.
Tax filings.
Well, as I said before, when you register in Tamis, that is when they expect the obligations to begin. So, but however, like VAT and so on, you may get away without having to go back and file returns for VAT, especially, but for corporation tax, you still have to file from the inception. Even though you've registered late, you still have to go back and file those corporation tax from inception.
Okay. So what is the percentage that's a portion for your land tax payments and mortgage payments? Well, how do you go about apportioning a particular percentage of the land tax payments and mortgage payments, interest to rental income for filing purposes? I hope I understood this question.
Well, if you're collecting rent from a property and you're paying a mortgage on it, then you can claim all of the interest that you're paying on the mortgage, because it is a direct mortgage on the property, so you can claim all of it.
Okay, so what about rental income?
Yeah, but the
an
rental income
amount.
is subject to 15% is a special
Right.
rate on that. It's subject
Yes,
to
I know there's
15%
an amount for rental.
of the net proceeds of the rental after you take all your expenses. If there's a loss situation, then there's no tax to pay. But once there's a surplus, then you pay 15% on that surplus.
Right.
From rental activity.
I have a query that came in from Facebook. As you know, we've been streaming live on Facebook. So Kerry Clark, who joined us on Facebook, asked, are there any returns for those who make under the thresholds?
Well, there's the threshold, but I'm assuming we're talking about the 25,000.
The 20, so let's look at 25,000. Obviously, if you're under 200,000, you're not registered for VAT, so that's not applicable.
Right.
So the 25,000, yes.
Right. So those persons who were under that threshold, once you are employed, you've been employed for more than 4 consecutive months in the year, and you have earned over 4,000 but under 25, then you would be entitled to a reverse tax credit, which is $1,350.
Mm-hmm. Yeah.
So,
okay.
yes.
All right. We are out of time now, colleagues. We are out of time. I'll ask my staff just to quickly go through the chat, make sure that I covered all the questions. I will say that they were coming kind of fast at me at one point, so I'm not so sure if I covered all. But if you didn't hear your question, or you didn't heard your comment read, please reach out to us at the Secretariat, 228-0162, 228-0162. We can put you in contact with our consultants on this call today, Mr. Robert Homer and Ms. Dawn Williams, who've been here with us sharing in this, our virtual tax clinic. And why we call it a clinic? Because we wanted to take you through some of the steps, some of the processes in actually completing your filing, registering for your TAMIS number, etc. And also to let you know that in the event in the next few weeks or months, you want to engage any of our professionals. You've seen the ad from Anderson Law, you've heard from Dawn Williams and Robert Homer, that you can engage any of these to assist you in your filing for the 2021 cycle. Remember, it's good to try out some of those apps and so on, but when it comes to actually filing, you may want to get a professional to review the data to make sure that the information is accurate, that you've completed all the appropriate fields in the on the TAMIS platform, etc. Okay, so bear that in mind. Now, before we wrap up, I'm going to ask you, please, in the chat section, you're going to see that link I mentioned before for our evaluation. Please, it'll take just about 5 minutes, and maybe even less than that. Go there now, click on that link in the chat section, and complete for us, please, a very short evaluation tool on our session today. This has been brought to you as a part of our monthly webinar series. And very, very importantly, at this time, as we are getting ready to go into that tax cycle, we want to make sure that our members are compliant, that our colleagues and our partners understand the procedures required, that we can, as the good book says, that you render to Caesar what is Caesar's. Okay, so I want to thank Dawn Williams from Resilia Accounting. I thank Robert Homer from RMH Financial Consultants, and I thank you as well for spending a part of your Thursday with us in this, our February webinar. Look out for others to come as we continue. Every month we bring some educational topic to our members, to our partners and friends, not only on our Zoom platform, but stream live on our Facebook page. And in the event that you missed any segment of it today, you can go on our website, www.sba.bb, SBA TV, and you can watch the session again. The slides are going to be there for you, that you can review them, and you'll get the information for your personal benefit. So once again, we thank our consultants, we thank the SBA team in the back who've been doing all of the hard work, the technical stuff to make sure that we can bring this presentation to you. We thank you again for spending a part of your day with us. God bless you all. Do have a good day. Bye-bye for now.